In 2020, a virus erased trillions from global markets in weeks. Airlines collapsed, oil prices crashed below zero, entire economies froze. Now, as fears around Hantavirus rise online, investors are asking one question: could history repeat itself? Look, most people think viruses only affect hospitals and healthcare systems, but Wall Street understands something different. Fear spreads through financial markets faster than the virus itself. My name is Frank, and I spend way too much time thinking about relevant financial topics. If you're someone who worries about inflation, market crashes, or how global events can affect your money, make sure to hit the subscribe button and give this video a thumbs up if this helps you out. Now here's the thing. Hantavirus is extremely rare. It usually spreads through contact with infected rodents, and health experts are not treating it like another COVID situation. But that's not really what investors focus on. Markets react to uncertainty, and historically, traders panic first and ask questions later. The moment scary headlines start spreading online, consumer confidence drops, people spend less money, travel slows down, businesses delay investments, investors start selling risky assets, and suddenly, fear itself becomes an economic event. We saw this during COVID-19. The S&P 500 crashed more than 30% in just weeks. Airlines lost billions. Oil prices briefly turned negative for the first time in history. Governments responded by printing trillions of dollars to keep economies alive. And this is where it gets really interesting. While some industries collapsed, others exploded higher. Tech stocks surged because the world moved online. Remote work became normal. Food delivery apps boomed. And eventually, Bitcoin skyrocketed as investors searched for alternatives to traditional financial systems. Now, you might be thinking, okay, Frank, but haven't markets always recovered? And yes, eventually they do. But here's what most people don't realize. The people who panic emotionally during crises are usually the ones who lose the most money. Back during the severe acute respiratory syndrome outbreak, Asian travel stocks dropped heavily, even though the outbreak was relatively contained. During the Ebola virus disease crisis, tourism and investment across affected African regions collapsed because international investors were terrified of uncertainty. Even the Spanish flu created massive labor shortages and slowed economies worldwide, because markets hate uncertainty more than almost anything else. Think about it like a crowded theater. If someone suddenly yells fire, people don't calmly wait for evidence, they run. Financial markets behave the exact same way. And when fear rises, investors rush toward assets they believe are safe. Gold prices often surge. Pharmaceutical companies like Pfizer and Moderna suddenly attract massive investor attention. Healthcare stocks rally. Traders move money aggressively, trying to stay ahead of panic. Then you get what I call the fear economy. Panic buying, empty shelves, mask shortages, medicine shortages, social media amplifying anxiety every second. People aren't just buying products anymore, they're buying certainty. Now, to be clear, Hantavirus is nowhere near the scale of COVID-19, but history shows that even the fear of outbreaks can move markets, damage industries, and completely change investor behavior. Because viruses don't just infect people, they infect confidence. And confidence is what modern economies are built on. The investors who survive moments like these aren't the ones who predict every crisis perfectly. They're the ones who stay rational while everyone else reacts emotionally. And honestly, that skill alone can change your financial future.